We're looking at the 2 hour, which is small, but it's not that small. It's good for scalping or maybe even swing trading, you could say, because that kind of trade could last you not just intraday. It could go longer. The first thing I do is just throw up pressure lines, and on something like PYTH where there's not a lot of history, I might throw up some smaller time frame pressure lines just to make sure there's nothing crazy in my way. And so this is like the easiest, fastest way, in my opinion, to find a really nice setup is just like, okay, before I really go dig into it, I just wanted to see what was going on. And so I love the setup on the 2 hour. It looks like we're above the ribbon, which is great. I happen to be looking at this while we seem to be, really maybe bullish retesting this purple line. And so this actually looks like an incredibly good place because it's PYTH especially, but just in general, it looks like a really great place for a low leverage long. If I really want to, have the best chance of being successful and not get stopped out, not lose money and all of that. But the reality, just from what I, can see here, without going too granular on it, because I will go granular on it, but without going granular on it just yet, from this macro, perspective, I say macro, it's the 2 hour, but from this, without going to the flex charts, it appears that I have a decent, like even just with price as it is, which I'm not a proponent of, market ordering into things, but give or take right where it is, I could probably be patient and like wait for even stronger asymmetry. Chances are it's going to come back down and tap on this line or something like that again. And then,
And
um,
so, and so right there, you just said something that's interesting. So traditionally, do you anticipate that? So then you put a limit order where you think it's going to come back down to then set up
yeah,
your
definitely.
long.
Definitely. That's the way to lose a lot less. Now, in the big picture, this is not a terrible trade, even like this, if you look at it, and I'd have to measure the asymmetry, but let's get it to where you can see it, right? Even right there, pretty much buying in right now with a limit order, you probably got yourself about a 6 or a 7 risk reward ratio, right? It was about 6.81. So that's not irresponsible. Most people would try to do that with this asset, just like the reality. They'd spot the asset trading up here, literally right there, and then they'd be like, well, but it looks bullish. I'm looking at all these things over here that look really bullish, and so I'm just gonna jump in. And that's the impulse. That's the impulse trade. That's the impatience. And I think it most often leads to loss because you have I think two aspects to a trade as I've come to see them. You have, conditions, and if everything looks great, and let's say it breached this pressure line and you like this, and then it came back down and now it's like retesting it. Maybe you believe that conditions are perfect. We could call that a trigger, right? Especially if all this looks really good. And let's say even better, even truly better, is if we start to see expansion monitor showing up here. Um, and we start to see like even more filled out breakout bars.
Mhm.
Like, and then let's just say, I don't know, these start showing up as green, right? Those linear regression breaks are not bearish, but they're actually bullish. So now this thing is looking even better. And at that point, maybe this is even green. So now we have more things supporting our success, and we have even less things, almost no things supporting our failure. Because that's really what it is. When you spot a red in here and you spot another little red thing and another little red thing, and you're thinking about doing a long, which is when all these are green, then you're really just finding, these little reds as these are things that literally it's telling me are supporting my failure. So I have to just go in and look at them and see, do I think that they're supporting my failure enough, or is it a strong enough argument against this being a good idea such that I should wait, or should I take the risk because there's always risk? So
Always.
should I take the risk and just like jump in knowing that I have very minimal things supporting my failure, and I have 90% of the most important things supporting my success. Namely, in our case, in DIIO, I would say orange movement monitors in all these time frames. And I would say bullish linear regression channels with bullish breaks in 2 hour and 6 hour time frames, and probably in the 4 hour. If I change this chart to go look at the 4 hour, I'd bet I'd find it. And then lastly, we have, let me clean the chart up a little bit. But lastly, we also have this cool little tool that measures essentially like opposing volatility. And so for an asset like PYTH to not have extreme closed candle opposing volatility, right? Because I do see how crazy this wick was. People have
Right.
to people have to acknowledge that this thing has wicks. If you don't like losing, you probably shouldn't play with wicks in general, like these wicky assets. But also, maybe you do play with them, but maybe you just go in with a smaller absolute value position size because you know this is risky because of the wicks in general. And then maybe you also say, hey, you know what? I believe that there's a pattern to the body of all these candles. If I just ignore the wicks, which the wicks are basically volatility. So if I just know that this thing is extremely volatile and within any given 2 hour period, it could do something insane. And then it just kind of comes back. And overall, there's a heck of a pattern, that shows up in just the candle bodies themselves. And this is what this pattern looked like. And then there
Mhm.
was like this moment of candle bodies doing this, regardless of the wicks. And now we're in a moment of candle bodies doing this, like I think we're maybe in another upward trend, like this first one, right? And then I have a lot of the mathematical data supporting me as well. The statistics, the math, the evaluation data is all kind of like supporting this little, period of time being an uptrend.
And
And then,
so, and
uh-huh.
so when you do that, so with it being so volatile, right?
Mhm.
So if you put something in and you put it in at a 5% stop loss, or you're being conservative, 5-10%, something like that, then odds are it's going to get worked out.
It could. That's kind of, I think, it's fair to say that on this particular asset, that is what someone has to consider. So, um, they may
So
choose.
then,
Mhm.
so then would you then personally be a little gutsy and go, okay, based off of this information, I feel strong enough, but because of the wicks being so strong, I'm either going to increase my stop loss or put my stop loss way down there in hopes of moving it up, as my thesis is either proven positive that it's going to continue up and so I'll be able to move my stop loss up, or do you just say, I'm going to watch it, and if it goes against my thesis and it starts going down, I'm just going to manage it myself and bail out?
Yeah, I would probably, because of the wicks and everything else, I personally on this one would probably either I'd say, hey, this already kind of held, and and especially let's say if I get an entry right at that purple line again,
Hmm.
I probably would do it with about this kind of asymmetry. Personally, I'd probably like give it a shot. But I think where I'd really be even more interested would be if we had expansion monitor showing, favorable favorable statistical odds of expansion to the upside. While we don't have that, I kind of feel like I could see a lot of ranging volatility. So it could be that this is great and it might be, a good time. But if I'm looking at the channel and I'm not ignoring the channel, right? Because I have the info right in front of me. And it
Hmm.
is it is tempting to just go, I'm going to try it right here because there's a pressure line. And you could, but there I'd probably just set a tight stop loss, hoping for that strict respect. And then I would try to protect it fairly quickly. That would just be my personal choice. I think everybody kind of has to decide their own personal choice. But the one that I'd feel a little more confident with would probably be if I could get in. And again, I look for respect, right? If these two pressure lines are ones that I'm looking at, then I want to kind of ask myself how much strict respect have I had in the recent past since these lines have existed, right? It's like, well, here not so much. Here, not so much. Here, not so much. Here, not so much. So if I'm like, why would a person count on those pressure lines being successful in protecting them, right? They kind of like, just based on logic, if they're really looking at all the data, they wouldn't. So what's interesting though is if we look at the channel, this has been pretty good. You know, this is actually not bad. This is actually not bad. And it had a line there. So when you have a line and the channel kind of making, giving you a bit of like added confluence for what would be a support or what would be a place where price action would incur some, in this case, buy pressure, then I think that is much more logical, especially because we're in an uptrend. It seems to be more solid, on the downside. So in other words, this was pretty reliable as far as like an entry. Again, I wouldn't want to test it with really tight asymmetry, like sometimes you can with Bitcoin or ETH, but I'll show you what I mean. But this overall, like pretty respectable. Even this one was pretty respectable. But I noticed, this one had massive deviation from the trend from this channel to the upside. But that makes sense because, it's a very volatile asset. And I would like that because if I got into this, I would love for it to have massive deviation on my long. And so, although this looks tempting and it could work, and I look at, was it respected in recent history? Like, and if it wasn't respected in recent history, then why should I expect it to be respected,
Right.
now? Like, I don't want to put my money into a thing that was clearly not respected, like way more times it was not respected than it was respected. So I don't ignore that stuff and just blindly say, oh, it's a pressure line, it should work. Um, Especially not on an asset like this. And some people, can find success with that. But I think the more you look at this data and everything that it offers you, the better, right? So if we know that the downside, especially of this channel so far, has been different, if you have just a few statistical points to take into consideration, right? 1, 2, 3, 4. And 4 out of 4 were pretty nice. Like it was a pretty nice, respected area. Then I would say that that would be my ideal intelligent entry. And I would say, you know what? If I could enter a trade with this expectation, I'm going to get rid of this other one because, like I said, the other one could work, but it's like just
Yeah,
way
it's
more.
already kind
I think it's just way more just gambling, like because you can see so many times it didn't work that well. So it could work, but again, I would definitely do low leverage on that and just still relatively conservative stop loss. But this one, if I was going to trade this, I mean, a really nice entry would probably honestly be much more like, a no leverage trade for this. Like if you wanted to be successful, I think this type of setup, and normally I'm not a fan of five risk reward ratio, but Paul Tudor Jones, says it's okay. And I like, I think that he makes sense. And so all I would do, and this is one of those where I think you do the math on it and you have to ask, does it make sense for me? And I think the formula itself is going to make sense, right? Like 5 is acceptable. I know in DIIO we strive for like 7 and 8, and sometimes, even a little better as an average. But 5 is beyond the threshold of heck no, right? Like if it was a 3, I'd be like, no, I don't think so. But if I'm going to get 5 units of reward per unit of risk, and I think that I'm highly likely to be successful on this, then it definitely makes sense to do it. So now the question is, okay, if I'm comfortable with this, which is probably my first thing I would ask myself, am I comfortable with this? Do I think that the logic is very good? And so here I go, man, it's a volatility cloud. It's the bottom of a pretty good sized channel relative to this type of asset, right? The 2-hour channel.
of.
And there's no perfect recipe for that, but I mean, 2-hour channel is 400 hours. So it took 400 hours to kind of, create this path that we're on. And so if I know that right now it's kind of like at the statistical median, or it was, now it's below the statistical median. Already, it's not a bad buy as a spot investment in the grand scheme of, where will it be in 2 days? Like I said, I think it could easily be up in the range of 50 cents or something. So somebody could look at it that way. But in the world of leverage, now that I've kind of explained that side of things, like how we got there, why that channel exists, and what the logic is, um, going back to the formula, which I think everybody has challenge on, 5 risk reward ratio is great. I think the best way to be is just like I kind of referenced something from the book Tools of the Titans, that the person who cares the least in negotiations often wins. I think the person that cares the least about catching a trade wins, because that person is not, they're like FOMO proof, you know? So if I don't care if I get PYTH, but if I get PYTH, it's going to be a great setup. That's perfect, because I can go and replicate this, and I can do this on a few different assets. And then I have this beautiful lifestyle that's more of I set it up and I kind of put some work in on the front end. And then after that, I could literally check back in a few days if I wanted to, because I could have set my stop loss based on logic, my entry based on logic, and my take profit based on logic. I could also set my take profit one based on logic. And maybe I believe that this thing could last a few days. I don't know, right? Depending on what's here, right? If there's just tons of green down here and you think this thing is going to keep going, then you could say like, okay, I believe it's going to keep going higher. So then, thinking outside the box allows you to do something like this, right? Let's just say you set up that trade, very conservative, way down here. And I'm going to go through
Hmm.
that math too, but let's just say you did that. And then you want to get a little advanced notice, right? So you set a line there and you say, I'm going to set an alert here. I want to know when PYTH crosses that horizontal ray that I set. And in this particular case, like a lot of times I do, when it closes above that line. But in this case, I want to know when it touches it, right? Because I just need to know when the price action is up there
Hmm.
toward my take profit zone. And at that time, what I would do is I would go back and evaluate this. And if this is getting increasingly bullish on larger time frames, then I'd be more aggressive with regard to what I plan to do here, right? So then you have a couple options. I might put something in here where I'd say, check on my PYTH long. And then I'd have, maybe this is cool because it gives you a chance to just leave a message. And so you're just talking to your future self. And so
Right.
if it gets up there, you can erase this, and maybe you leave it or maybe you erase it. But if I was just to leave myself a message, I would say at that point when that happens, my question to myself will be, um, do conditions warrant a total take profit or a, you know, smaller take profit like 35%? Check on trade. And then that's it. I just literally, I want to know when it touches that line. I've thought outside the box. I created my own custom alert. I could set that line wherever I want. It's based on the line. So I just say, okay, I'm going to create that. And then I get to decide if I want to take some of my money off the table, keep it all in, or take all of my money off the table. And if I decide that I want to be notified a little sooner, I could go, maybe when it reaches kind of like a new local high, right? Like I want to know the moment that it potentially is going to break out even further so I can look at my data a little sooner. And so just using this little recent high and maybe even squinching the chart up a little bit, I can go, okay, there's one over here too. You know what? Let's base it off that one. So the moment that it goes just like a little micrometer above this one over here, I'm going to get notified. So now even my alert is based on some form of logic. And so it's
Mhm.
like, okay, that would be the PYTH high since May 20th. Now, has it gone higher in its history? Yeah, it looks like it has. But for my purposes, for like my trade, especially with my, desired goal, take profit zone, that's probably about where I want to be notified. And the whole purpose of me being notified is just to decide how much of the money I want to remove from the trade. Um, so those are like some outside the box things to think about as far as like how you can use the data, how early you can start deciding on how much you want to pay yourself or how much profit you want to take. You can also decide, I think it's also important if you get up to this point and you had a stop loss here, and I'll go through the logic of why this trade makes sense to me on this particular one. But if you had a stop loss here, and then you're gonna get notified up here, um, the other thing you can do is you can move your stop loss, right? If price action is now breaching this white line, and let's just say this is a nice green candle, right? For us, it's
Mhm.
orange, but for most people, it's a nice green candle. Um, right around here, I would say, man, if I haven't moved my stop loss, because my whole goal is not to sit around watching this thing. So if I haven't moved my stop loss up by that point, then you know what would be a good idea? If it's there, I'm going to move my stop loss up to about here or maybe about here. And I'm going to secure those profits. And I think that would probably be, the logic there. As far as how to treat the trade, if you were in a successful trade, because based on this entry, you'd be securing something like that, right? A 4.69% organic, or maybe like a 6% organic. So I'm going to leave this here because now I'm going to walk through some of the logic of this trade, and then I'll kind of give you like my I think that'll wrap up my thoughts on this, and then we can kind of talk about anything that you might have questions on.